welcome to Caribbean News Blast. With me in the studio today is Mr. Ryan Baker, a senior loan officer from Quintessential Mortgage. And Ryan, you're here today with us because we want to break down mortgages and refinancing, because that's the business that you're in.
Yes.
And as someone who broadcasts to a community which is very heavily Caribbean and who is very much into mortgages and refinancing, I think that this is the information I wanted to bring to them. I tried to cover it on a previous show, but I'm not a mortgage broker or a refinancing specialist. So we thought, let's bring somebody on, and I know you, and you're pretty good at what you do. So we decided to bring you on, and so we could kind of break it down. Tell us a little bit about yourself and the company that you work.
First of all, thank you for the kind words. I work for Quintessential Mortgage Group. We are a mortgage broker that is licensed in the tri-state area, so in New York, New Jersey, Connecticut. We have a broad spectrum of programs, so it's not just a specific program that you can or cannot fit into. There's a lot of benefits to both the refinancing and purchasing of homes, of course, which we'll speak about. But my biggest thing is being able to help everybody in a topic that most people don't know much about. So I think it's very important to educate everybody as much as possible about the pros, cons, and what they need to look out for when doing a transaction such as a purchase or a home refinance.
Because your home, for the average one of us regular folks, is the biggest investment that the average person would have. So
yes.
It's important if you have any information that you could make you more educated in terms of how to purchase or how to refinance.
Correct.
So as a senior loans officer at a mortgage broker, is it fair to say that the mortgage broker is there to try to shop for you for the best mortgage or the best loan? Is that pretty much what you do? You try to make sure that you get something that kind of tailors to the needs of your customers?
Yes and no. Let me first explain the difference. So a mortgage, if you go to a mortgage bank, whether it's a Chase, Citibank, or a privately owned mortgage bank, they have the products that are specific for that bank. So when you go there and they tell you what it is, that's what you're going to get. With a mortgage broker, the benefit we have is that not only do we work with 10 to 20 different banks, but we get to take your information and I get to price it out with all my top lenders and really compete to figure out what the best possible solution is. In addition to that, by having all these different banks, we now have banks that offer programs that other people are not doing.
So in other words, when you go to a Chase or one of these other banks, they have their stuff that they sell.
Correct.
But it's not necessarily they're partnering with different banks to say, let me see what's best out there. Let me look around and see what's best. Okay, so that's
you're stuck with, if you go to Chase, you're stuck with
whatever products they have. Yeah.
Exactly.
Okay, your stuff, you have a broader umbrella to kind of go out and say, let me see.
100%.
Yeah. All right. What are some of the reasons that people refinance for? What are some of the main reasons that people refinance for?
So there's a few reasons. So one of the biggest, and I would say most popular, would be to take cash out. Now I don't recommend people to do a refinance to take cash out so they can put a pool in their backyard. But for people who are in debt, or people who want to have some money in a bank that just for a rainy day, or they have the comfort of putting money in the bank. People will do that. Another benefit of refinancing would be to go to a shorter term. Now, a shorter term will have a higher payment, but you'll pay less in interest and you'll pay off your mortgage quicker than you would for a 30-year term.
Right.
Now, another thing is that the rates are also lower. In addition, another reason would be that people love to save money. A lot of people, unfortunately, are in a higher interest rate, and because of the things that have transpired in the past with the mortgage industry, they're very nervous, or they've been in the same loan for 5-10 years, and they have a high rate that they just don't want to do anything with, or don't want to bother.
Right.
And it's a problem because people are spending more money than they need to, and I feel as if that really should stop. you know, because it's unfortunate,
Right.
especially with rates as low as they are now.
Right. So you're saying that you said earlier about some of the wrong reasons. You did mention like the pool, putting the pool in the backyard. Are there other wrong reasons why people might?
Yes, I actually just dealt with someone who was thinking about it the other day. So he, for example, if you have a rate of, let's say, 4%, and the rates are 3.5%, well, one would think, oh, I can get into the threes now. That 0.5% may not save you enough money to make it a beneficial loan. You know, people are very concerned about the interest rate more so than the savings. Now, another reason.
Why though? Why wouldn't it be beneficial? Is it because of the closing fees? And
Well,
stuff
there's
like that,
and you need to have, well, part of the an underwriter's job, and the underwriter is the one who reviews the loan and ultimately gives the approval, is to run a few benefit tests. One of the tests, which is important in this scenario, is how long will it take you to recoup your costs? So it's a benefit to cost ratio, if you will.
Okay.
Now, it used to be 5 years or less. Now an underwriter really wants to see 3 years or less on the case of a refinance. Because if you're going to pay $15,000, $20,000 in closing and save $100 or $125 a month, as you can see, it's lopsided in the favor of the closing cost.
Right.
Because $100 a month is $1,200 a year. You know, you're talking about 10 to 12 years until you recoup your closing costs.
Right.
Another thing is that when purchasing or refinancing, unless you're going to be in the house for a long time, do not pay points. And a point is, you know, to buy down the interest rate, or to, you know, to pay, and a point is equal to 1% of the loan amount. So if it's a $300,000 mortgage, a point is $3,000.
Okay.
So people, you know, unfortunately there are banks that offer these low rates, but they come equipped with, you know, a point to 2 points. And like I said, you know, on a $300,000 mortgage, that's $3,000 to $6,000 added on. And if you're going to refinance out of that mortgage, there's no sense to pay a point or two.
Okay. So we talk about refinancing. Well, let's cover refinancing and then we go to the purchasing.
Okay.
Okay. Can we refinance? We know people can refinance their homes. What about if you have a co-op or a condo? I assume with a condo you would, because that's like having a house. But what about a co-op?
So condos are easier than co-ops. I can do both, which is great.
So you can refinance
Yes.
co-ops. Okay.
Now, a co-op, I don't recommend co-ops, only because not many people know this, but with a condo and with a home, you own it. It's yours. You know, whether or not you have a mortgage, you know, it's yours at the end of the day. With a co-op, you're buying shares in a building, and that means you have to go through the board to get a board approval. They have to look. They're very invasive with your finances. They dig very deep, and at the end of the day, they can throw you out at any point in time. You know, but I can do a co-op if the credit scores are good. We can get away with, you know, 10% down. If they're not good, you're looking more like 15 to 20%. And the good thing about condos and co-ops, or, you know, is that with a single-family home, you need a big homeowner's insurance policy, and, you know, it could be $100 to $200 a month on that. But with a condo and a co-op, all you need is what's called a walls-in policy, which is just to
anything inside the wall.
Exactly.
So
exactly. It's a very minimal policy per month.
Okay.
And one more thing I did want to say: the rates on a co-op, especially with, you know, the lesser amount down, will be, or a little amount of equity, will be significantly higher than on a single family, a multifamily, or a condo. And it's just because, you know, the co-ops are much harder to do, and, you know, the pricing for that just never really works out so well.
Okay. So now I'm going to ask, you know, to talk about home ownership. Like you're living in the city and you want to move out to Long Island, or you want something right in the city. You want to purchase a home. What are some of the things people are looking at in terms of, what should they look at in terms of So I decided, okay, I'm in an apartment in Queens, and I said, I want to buy a house, or an apartment in Brooklyn. Like I lived in Brooklyn before I moved out to Long Island. So I want to buy a house. Where do I start? What do I need to know?
So, it's funny, and I'm glad you say that, because everyone thinks, when they get a call from me about purchasing a home when they're just starting, I don't want to talk about a mortgage. I don't even know about a house.
Mm-hmm.
That's the exact reason why I'm calling. Because the first thing you need to do is you need to get pre-approved by me. Because no realtor is going to take you seriously with just giving them a call and say, hey, I want to look at this property. I haven't gotten pre-approval yet. Because there's been so many instances where people are just looking at houses because they've got nothing better to do on a Saturday or a Sunday.
Mm-hmm.
Or people love real estate or architecture.
Mm-hmm.
Or can't afford it. And
right.
and it's been a very frustrating thing on the real estate side. So what I will do is I will take a look at the credit report. I'll ask you to send W-2s or tax returns right off the bat, so I can have a better idea of what we're looking at for income.
Right.
And then I'll issue you a pre-approval, and then I'll set you up with a realtor or a real estate agent, should you not have one, who will then show you the houses that you're interested in. And then once that has been taken care of and you find the house, you then submit the offer. And once it's approved, the house goes into contract, and then I start my work.
Mm-hmm.
So once I have the contract, I submit the loan, and the submitting to processing to underwriting to approval. With including the appraisal, probably 2 weeks time.
Mm-hmm.
Okay, and then it's all based off of when the seller agrees to close.
Okay. So, So, in other words, before you even try to go find a house, find out what do you approve for. Make sure the money thing is in order.
You can't put the cart before the horse. And not many people realize that the horse is the mortgage and getting pre-approved.
Yeah.
And, it's the biggest thing to ask when getting pre-approved is what the interest rate is. Because while you're not guaranteed that rate when you ask, and you'll get an estimate, the thing is that so many people are just taking their first pre-approval and not knowing what interest rate they're being offered. And that's a problem, because the idea of owning a home is obviously, you want to have the home, but you also want to have the cheapest possible monthly payment.
You have more equity and smaller
right,
payments.
and you want to pay less interest, so that's a big thing.
So, so now you got that approval, that pre-approval, you found the house and you're doing your thing, and they're going into to closing. Break down the points. I know you mentioned it before briefly. Break down points for me. Like people say, the closing fees, points. Break down points. Break down the closing fees, and not just points.
Of course.
Break down the closing fees, including points.
Well, so points are voluntary, okay? Unless unfortunately you're dealing with someone who doesn't inform you that you're paying points, and you'll ultimately see it on the closing fees. But like I said before, the point it's based off of one thing, the interest rate. So there's something called par. What par is that par is the interest rate that is being offered today, with no cost to it and no lender credit. Okay, so par is considered the number 100. Okay, if you want to buy down the rate, okay, and you want a lower rate than today, it would be at 99, which means we would have to charge you 1 point to get to 100, because that's what it costs.
Right.
Okay, now that 1 point is 1% of the loan amount. Okay, now on the flip side, if you want to take an interest rate that's above what their interest rate is today, as a reward for that, you get an amount of money to be put towards your closing costs. So that's a benefit. So to take a higher interest rate, you get money to offset your closing costs, and it's applied to the loan. Or if you want a lower rate, then you have to pay for it. Okay, which a lot of people will do if they're going to stay in that house.
In that house for a while.
Because if someone says to me, hey, I don't ever want to refinance, do what you have to do, get me the lowest possible rate, then I'll say, this is what our option is, this is what it's going to cost, and then it makes sense because you're going to stay in the house.
Right.
Now, the other costs that are involved normally are as follows. So you have your escrow reserves. The escrows are your monthly property taxes and your monthly homeowner's insurance. Now, they don't get paid every month, but every month that comes out of your payment, it goes into an account.
Oh, okay.
Now, when you first refinance or purchase a house, there's got to be money in that account because taxes and insurance will come due at some point before the first year. So in order to make sure that there's enough money in that account so that you don't get penalized for not being able to pay the taxes or the insurance,
Right.
we pick up a certain amount of taxes and a certain amount of insurance. Now, I can't give you that answer now because it's based off of when they're due. Each county and each village and town are completely different.
Right.
So, but for the boroughs, for example, they're due every quarter. So January, April, July, and October is when taxes are due.
Taxes are due. Okay.
So if we were to close and your first payment was in July, I would have to pick up 3 months of taxes because they're due in October. You're not going to have a quarter of taxes after 3 months of a mortgage payment.
Right.
So that's not considered a cost, it's a reserve.
Okay.
Because money has to be in that account. Because if your taxes come due and there's no money in that account, you're getting penalized. Okay? And then the only other cost that's added, and this is the big one, is title. Now, title is required on every loan because they're required to do their title searches, make sure there's no liens against you and no liens against the home. And, they tend to, it's a few $1,000s. But if you're
give me a scenario, like if it's this amount, the title could
so
be
for a $370,000 loan, okay, the title is about $3,500. Okay.
Well, that's pricey.
However, there's more. In the boroughs, okay, in New York State, there's something called New York State mortgage tax, and it's based off of what county you're in. Unfortunately, in the boroughs, that percentage is the highest. It's between 2 and 2.9%. So on $300,000 loan amount, you're talking about, like $7,000, $8,000 just for mortgage tax. Okay.
But break that down for me. Is that different than the taxes that you were talking about earlier with
Yes.
This is different. So what exactly is mortgage tax?
So mortgage tax is, they have it in certain states, okay, and it's a requirement that you pay it. It's a percentage of the loan amount, okay, and it's per county. So, for example, New Jersey, one of the states that doesn't have mortgage tax, okay. New York has it. So, in the boroughs, you pay lower property taxes, but very high mortgage tax on these transactions. In the island, on the island of the suburbs, the taxes are through the roof, but the mortgage tax when you do a transaction is less than 1%. So it's a trade-off.
Okay.
There is.
So you're paying one way or another. It just means it's different stuff you're paying.
Exactly. On a refinance transaction, there is a way around having that mortgage tax, and it's called a mortgage assignment. The problem with that is that it's a cost to the borrower because they have to pay for it, and it's a lengthy process, because it's all on their current bank. So I've seen it take a month to 2 months just to waive that. At the end of the day,
might be worth it.
It's worth it in certain scenarios. It's only worth it if if the amount that they're waiving is significant enough that it costs, that money that they're waiving is a lot more than what it's costing you to pay for that process. So if you're going to save $2,000 but it's going to cost you $1,200,
right,
I'm not going to recommend that you do it.
Right.
But if you're going to waive $5,000 and it's going to cost you $1,000 or $1,200, then it
makes sense to do.
100% it makes sense to do. It's all about the cost to benefit here, and it's extremely important that everybody understands that because, while it's great to remove a cost off of the refinance or the purchase, if it's only going to save you a couple $100 or $1,000, it's not worth it because that $1,000 the way you calculate the savings is over the life of the loan.
Right.
So $1,000 over 30 years.
That really worked.
I mean, what is it like? It's a couple bucks.
So okay, I got what you're saying there. So overall, what should people keep in mind? Let's go first with I know you mentioned some things with refinancing. Let's kind of sum it up a little bit here. Overall, what should people keep in mind regarding, let's take the refinancing part. In other words, don't do it lightly. Is what I'm getting.
Well,
know what you can do it, but
right.
know what you're getting into. Understand the fees involved.
Of course.
Understand the benefits. Do it for the right reason.
And I want to just touch on something about the purchase side. And I'll give an example. I had a client back 6 years ago who wasn't able to afford the mortgage and wasn't able to get approved for a refinance because they didn't have the income. They bought a $500,000 house, making a combined income of $50,000. Now, $50,000 a
No, a lot
year,
of money.
especially in New York,
In New York,
is
right?
not is unfortunately not a lot of money.
Right.
But you cannot buy a house that is going to overextend yourself, or even worse, make you lose your home.
Right.
When buying a house, you need to be confident that you will be always able to make this mortgage payment. And it's not just because I want my bank to get paid. At the end of the day, my bank pays me or my broker pays me, my duty and obligations are to my clients. The last thing I ever want to see is somebody go in for a house that's going to end up putting them on the streets in 2 years.
Right.
So you need to know that you need to be able to have that payment made, and without stressing out. And unfortunately, everybody stresses out over bills because who wants to get mail full of envelopes that are just bills.
How am I going to do this? Yeah.
Exactly. But at the end of the day, the most important bill is the house. It's what protects you from everything, all the outside elements.
Yeah.
So that's the biggest thing on the purchase side. On the refinance side, you got to make sure that your benefits outweigh the cost. You have to make sure that you're doing it for the right reasons, and you need to know that while you can take cash out, as I mentioned before, don't do it for things that are not necessary. Take the cash out for things that will help you. Money in the bank. Send the kids, for your kids.
Credit
Exactly.
cards that are really harassing you.
Exactly.
Things like that.
100%.
Okay. So they're legitimate reasons that people might want to do it.
Correct.
But don't do it frivolously. Don't do it for foolishness. Make sure it's something where the interest rate is low and it makes sense. Not
It's
just
the same
that
thing
it's
as
low.
taking out a credit card. Don't take out a credit card because you want to go on a $5,000 shopping spree.
Right.
Take out a credit card because you want to build your credit, because you want to know that, if you have things that you need to purchase, that you can put them on the credit card and then pay it off right away. It's very similar, about not doing it for frivolous reasons. It's very important to remember.
Okay. So I learned something because I wasn't sure whether you could refinance co-ops. So it's more complex, but it can be done.
It's very complex. I need to say that.
Okay. So, but it's doable.
It can be done.
It's possible. So we went over some of the reasons that people what we know financing, both in terms of a mortgage and refinancing our existing home.
Correct.
And what are some of the reasons people finance? What are some of the wrong reasons to finance? And conversely, what are some of the good reasons or the pros in terms of refinancing? And in doing so, we broke down refinancing as a whole, and we also broke down, the whole thing about buying a house. And you said something which is really important. Don't buy something that you know you're not going to be able to keep up. It's no good having something like a house that you're going to be stressing every month trying to figure out how you're going to pay it.
Don't keep up with the Joneses. Keep up with yourself.
Oh, so perfect. And you broke down the closing fees.
And I actually wanted to mention one thing on the closing costs. So one thing that I didn't mention is that normally, with each bank, so the client doesn't pay us for being a broker. Okay, the bank pays us.
Okay.
Now the bank will have an underwriting fee. Okay. It's an application fee, which encompasses application, underwriting, and processing. That's between $795 to $1,000. Now that's rolled into the loan, mind you. So what I want to do is, and I know that you have a great loyal following. for anybody that is interested in, a purchase or a refinance, and, they mention, obviously this television show for you. What I'm gonna do is that I'm gonna waive that, because you know what? At the end of the day, it's important to know that I want everybody to know that I want to go above and beyond for anybody that works with me.
Well, wonderful. So you're saying on this show, you're saying that, folks, you're hearing it here. You're saying that if someone calls in and they reference this show,
and your name, they have to
and
say
my
it.
name, Trish St. Hill, okay, and this television show, QX Television, on Caribbean News Blast, and you reference that, Mr. Ryan Baker and in his professional capacity would be waiving his fees.
100%.
100%. All right. I like doing business with someone like this.
Listen, and if you don't believe me, give me a call and I'll show you in proof.
And you know what? I would say this with Ryan, because I know Ryan very well, and he is a man of his word. He's somebody that when he gives his word, he does stick to it. I remember one time doing a transaction with you, and I remember there was a little mixed up, and you didn't think that it would have gone the way. It ended up being okay in the end, and you literally said, "I'm going to give you some of my money that the bank would pay me," and it thought it wasn't a big deal in the end. It was okay, right? That's how we met. But you were willing to do that. You were like, because I really want to walk away from this feeling good. And I really admire that about you. And we became friends beyond
100%.
that, and so you're a man of your word. And if you say you're going to do that, you're going to do that.
And also, I remember with your transaction, unfortunately, with the appraisal, and anytime that if there's a little hiccup or a bump in the road,
Mm-hmm.
I have no problem, giving up some of my commission to get
Right.
a deal done to make
Right.
a client happy, because at the end of the day,
Mm-hmm.
if I give up a couple dollars, and listen, by no means am I saying that I'm the wealthiest person in the world.
No. But
listen,
it
I work
brings
just
you-
as hard as
right.
everybody. I want you guys to know that I have no problem giving money back,
Mm-hmm.
because
Just to make something
to
right.
do the right thing, because
Mm-hmm.
obviously it'll benefit me in the future, because what goes around comes around.
Mm-hmm.
But if you have somebody who's not willing to budge to get you a lower rate, you're never going to want to talk to them again.
Mm-hmm.
You're never going to want to send them your friends, your family.
You won't be on a
coworkers.
TV show.
Exactly. and I'm all about customer service.
Right.
And the reason why I give out my cell phone as opposed to my office line is because if I'm not in my office, I'm out doing a million other things with
Mm-hmm.
business. So there are days that I'm just not in the office, and there's
And
nights
you're
that I'm not
always
in the office.
reachable.
Yet I'm always reachable.
And that's good, because you don't want somebody where you have to go through a maze to get to.
I've had a client text me at 3:30 in the morning, and I responded.
Oh, I wouldn't do anything like that.
I had one eye open, but I responded. Even on my own bachelor party,
Mm-hmm.
I responded to clients. I am always reachable.
I remember I was one of those people who called you at the bachelor's party. But in a very serious note, I think this information is really valuable to anybody listening who might be buying a house, or I'm thinking from somebody. This is I'm on my third home, and but the first time I purchased a home, I had no clue. I was a 23-year-old.
So 4 years ago?
That's right. I was purchasing my first home, and my ex-husband and I were 2 kids. We were 23.
And you must have
we
been
had
so
no clue.
overwhelmed.
Oh my God, we didn't know what to do. So we put the cart in front of the house, so to speak. We just went to a broker, and then they said, well, and thankfully he had some connection with a banker,
Right.
and he was able to get us pre-approved. But we didn't know you have to do that. You know what I mean?
100%.
We had no clue. So it's really a really overwhelming process. If you're trying to buy a house, or you have a home, and you're thinking of refinancing, how do you get to the right people to help you, guide you? And you have a lot. I want to take a minute to discuss something. You have a lot of people who are calling and bombarding people's cell phone with these refinancing options and credit fixing options, and it's overwhelming. And a lot of them very unscrupulous.
Yep.
Let me put it that way. So it's important, if you're doing this, to make sure you're dealing with somebody who you have some kind of a reference point, where you have, if possible, or where you did your research and you know what you're getting into.
100%.
Your home is, if you have a home and you're trying to refinance, that's an important thing in your life. You don't want to let that go in the wrong hands. You don't want to go out and refinance with somebody who is going to lead you down the right path.
And I
It's very
want to
important.
interrupt you for 1 second. And going back to that scenario, the situation where I said the $50,000 couple, their response was, "It's your fault. You put me into this home." And it wasn't me directly, but she's saying, mortgage bankers and brokers. The problem is that while that time was a very bad time, and a lot of people were, were doing the wrong thing in this industry, and that's why it's gotten so strict. Mm-hmm. It was half of their fault too, though, because you have to know what you can afford and what you can't afford,
right?
Because while my software will do the calculations, and I'll let you know based off our ratios. Mm-hmm. It doesn't take into account like childcare expenses or this expense. So you need to make a list of every expense that you have and how much money is coming in,
right.
And you need to know what you think and what you feel comfortable affording, not what someone tells you what you can afford. Because the second that someone tells you and you haven't done the math is the second that you've opened yourself up to get taken advantage of.
You know what I say? And you can tell me if I'm wrong. If you have a mortgage or you're about to get a mortgage and you're not able to cover that mortgage with one paycheck, because hopefully you get 2 or more paychecks, right? If you're not, so let's say you're somebody who gets paid bi-monthly, like every other week,
right?
Or maybe the first and the middle of the month. Mm-hmm. One paycheck should be able to cover that mortgage and insurance and all of those things.
You're right. Here's the thing, though. There are situations where people get paid. The way their pay works is as follows: salary is the first check, commission's the second check.
That's true.
Okay, now in that scenario, people who are in commission jobs don't have a big salary, so they'll get but normally, I guess I would say you are right.
Yeah. And so there are exceptions to every rule. So yes. I think in that scenario,
100%.
But if you have if you have a job like
W-2 salary, right, yes,
you need to be able to cover that mortgage and the insurance and all the taxes and all that stuff with one paycheck, so that other paycheck is left to pay the other bills and have you save something. Otherwise, you're going to be overwhelmed.
100%.
That's my.
And I wanted to touch on one more thing. Is that a lot of people will say, "Oh, I can't refinance, I can't purchase because of my credit score."
Oh, I'm glad we're touching on this credit thing.
It's very important to know. I have a simulator that I can run to see what you need to do in order to increase your scores without having to go through credit repair for 2 years. But B, I'm closing loans to people who have credit scores as low as 550.
Wow.
So
is the interest rate a lot higher though?
Not really, because it's FHA. Do not hesitate to call me, even if you think that there's a chance that you can't get this done.
So here's the number on the screen below. Okay, so you can contact Ryan to that number if you need to talk to him further about this. You're listening to a lot of stuff here, but you may still want to call him and go over some stuff with him. So I'm glad you touched on the credit issue, because that may be another reason.
But you forgot to say one thing. What? You can call me at any time.
No, you heard him say it, but don't call him at 2 o'clock in the morning.
I may not answer. No, I'm kidding. I'll answer at any time.
You'll answer, trust me. But you touched on the credit thing, and I think that is really important, because that might be another reason that people might want to refinance. You have a ton of bills, credit card debt, you got blah blah blah, and you're being overwhelmed, and your credit score is maybe it's not the worst, but it's not the best. So one way to also get that cash out, pay off that debt, put a little something in savings,
and there's 2 ways you can do that.
Your credit score.
What will happen is, so there's 2 ways to do this, and I recommend, sort of the way I do it to all my clients is that, listen, we can either give you all the cash in one check, and then it's on you, which if someone gave me a check for $60,000 or $50,000 or $100,000, probably look at it and say, all right, listen, I don't care who you are, money is tempting, okay? Right. And as they say, money is the root of all evil.
Right.
It's true. The way I recommend to do it is we'll give you some cash that so you have some money, but we'll then send you checks made out to the debts that you're paying off, so that all you have to do is just send it in.
And if that's one of the main reasons, why wouldn't that be attractive? You know what I mean? Because at least, like you said, it could be tempting. You get a $60,000 check. Okay, I was going to pay $50,000, but maybe I pay $40 instead.
Maybe if it's made out to them, and go to Florida or California for the weekend.
So I think it's always a good idea. It's not like they're telling you I'm going to pay it for you, but they're going to send that check made out already to that vendor, that credit card company or what have you.
100%.
And then your money, it comes to you. But I think also one of the things I want to touch on. So shouldn't people also keep in mind that if you a refinancing, there's also the fact that someone may be refinancing and have your mortgage extend. That's a reality that you need to know. If you're taking it off for the reason that we just went over just now, chances are, because you're in a financial situation, you have to be aware that your mortgage is going to, let's say you had paid already 10 years off of a 30-year mortgage.
Right.
Now you probably have another 10 years put back on. So,
right.
Or extra 5 years or something.
But
so,
your payment will be lower though, because
right.
since the loan that you took out 10 years ago will probably have a higher balance than the new loan.
Mm-hmm.
Now, if you're only gonna save a couple dollars and you're not gonna take cash out, then no, it doesn't make sense to add back that many years.
Mm-hmm.
You know, each mortgage is unique in its own way, and each situation is unique because, you know, someone who has paid off 10 years but needs all this cash,
mm-hmm.
that makes sense. You know, so every situation is different.
Mm-hmm.
You know, and like I said, you know, I don't want
I'm
anybody.
going to give you a napkin here because you know what, these lights, the studio has a lot of lights, and I can feel myself standing. But with me, I have that special time of my life that I never know if it's the lights, but I think it is the lights. There's a lot of lights in here.
It's okay. I sweat on a daily basis, and I'm in this suit, so it's not making it better.
Exactly. And it's summer.
Yeah, exactly.
Okay.
But you know,
yeah, so
that's
you're starting
important.
your top, yeah.
You know, so you got to know that. You know, call me and I will break down all different. You know, I will give you pros, cons, because at the end of the day, while it's nice to make money, I'm not gonna put somebody into a loan or a position that's gonna negatively affect them.
Mm-hmm. So give us your number. Give them your number, and we're also gonna put it on the screen.
Of course. So my cell phone and direct line is 516-532-8494. And another number that I want to give out is my license number, so that anybody who wants to look me up.
Oh, great.
Okay. What you need to do is you need to go on Google and type in NMLS Consumer Access, and my license number is 136677.
I like that. Put it all out there, and let people do their research and do it with a clear hand.
100%.
You know? Yeah, absolutely. I like that. All right. So I think this is a lot of really good information. Now, you're mentioning that you have people who are closing loans who are not necessarily have perfect credit.
Correct.
What's the lowest credit score have you been able to get somebody a mortgage with?
Me personally, 550.
Okay.
I do have an outlet that if you don't have a lot of debt and the debt to income ratio is very low,
mm-hmm.
there are scenarios that we can get you a loan with a credit score under 550.
Mm-hmm.
But that's very rare.
Mm-hmm.
And but everything else has to be extremely clean besides the credit.
Mm-hmm.
You know, and in addition, anybody who, you know, if you had a bankruptcy in the past, don't let that hinder you from calling me, because there are situations that we can get this taken care of. Even if you're in a Chapter 13 bankruptcy currently, I can refinance you.
Mm-hmm.
You know, so like I said, no matter what issue that you're having that you think, oh, I can't get a house, I can't get my mortgage refinanced.
Talk to you and
call me first.
Yeah.
Don't make that assumption on your own,
mm-hmm.
because you know what they say about people, about what happens when you make an assumption.
Make assumptions.
You know?
Assumptions are not really what
Exactly.
we think they are. So we didn't come to talk about that, but what is the difference between Chapter 13 and Chapter 11 bankruptcy?
Chapter 11 is a business bankruptcy.
Okay.
So in Chapter 13, the personal ones are Chapter 7 and Chapter 13. Now, forgive me, because I don't know, that's not my area of expertise.
Right. We didn't really come to talk about that.
One of the bankruptcies includes all of the debt, and then the other, including the mortgage, and the others, I think, just include the debt, not including the mortgage.
Mm-hmm.
Chapter 7, you have to wait at least 2 to 4 years to refinance.
Mm-hmm.
Chapter 13, you need to be either a year out of bankruptcy, or you can be in it still, and we have to pay off the remaining balance of your Chapter 13.
Mm-hmm.
With a foreclosure, if you've had a foreclosure in the past, you're looking at between 4 and 7 years from the time that you had the foreclosure. There are extenuating circumstances.
Mm-hmm.
You know, if you were relocated for business and and you have documentation, that's one of them. But I can get into that with with the client if they have that situation. But like I said, there are so many things that we can do for people, let us make that decision that we can't help you. Don't take yourself out of the race.
Because sometimes person could be helped, but they're sitting there being so stressed and really thinking, oh my God, I have no way out of this.
It's a problem.
But you mentioned on something regarding foreclosure. So what is there in your loans that prevents easy foreclosure? Like, what is there something about the way the programs that you get people in? Short of, okay, if you don't pay, you're going to foreclose. We know that. But is there anything? Okay.
There's no one can prevent that with other than.
What about FHA? What does that mean? I don't know what FHA is. I've heard it so many times. So I'm sure that if I am absolutely clueless about what it is, people out there are clueless about what it is. What is an FHA mortgage?
It's a government loan that is made available with less strict guidelines than a conforming or conventional loan. It's for people who have poor credit or people who are putting down, who only want to put down 3.5%. Okay, so the government will do these loans it's easy to get them, but as a result, they insure themselves. So as part of your monthly payment, you have what's called PMI, okay, private mortgage insurance. And that's a percentage, okay, and you pay it every month. But the reason that it's on there is because you're able to get a loan at a time when nobody else would give you a loan.
So, okay, I got you.
Yes.
So that's what it's, so the government insured.
Correct. Federal Housing Administration.
Oh, that's what it means. Okay. See, I had no clue. I was here, but I had no clue. Okay, but we covered quite a bit of stuff here, and we want to have you back on the program.
I would love to
get into some other stuff. This and other stuff more in depthly. I want, for instance, to be able to have you, and probably going to have like questions from the audience that they send in to us.
Of course.
And we'll have you, because there's a lot of stuff that we are talking about here that people would generate other questions to people in the audience. So if you have questions, please send your emails to us at contactus@qxtv.com. That's CONTACTUS@CUEXTV.com. So we really had a very wonderful time giving a lot of information. And I hope that you'll come back. I hope you'll have another.
There's no hoping. I will definitely come back. And next segment that we do, what we'll do is we'll tailor it towards a specific part of the mortgages, and then the following one we'll do another different program.
Exactly.
So that everybody's aware all the different products that we have.
Exactly.
And maybe next week, next show we'll do the program that I have specifically for people who would just come out of trade schools who have a ton of debt, who can't get a mortgage because they have such high debt from the loans. We have a product for them.
Right.
So there's a lot of different products specifically for people that need it.
So what about you have people who have come out of things like medical school, law school?
It's actually designed specifically more so for the medical school. So nurses, doctors, anybody who comes out, they'll be $200,000 in debt with a high payment. So that high payment is gonna make their debt to income ratio very, very high. So what we're able to do is we're actually able to give them credit for their earnings, because they're going to be making a significant amount of income. So we're not going to really rely heavily on that big student loan payment. And it's a big advantage for people who are in that position. A lot of people are taking advantage of it.
Listen, I mean, this is unfortunate, but a lot of times these young people going to these schools that it sets them up for making a better income, but they're riddled with debt. So I think that's a really important show to do.
100%.
So once again, give them a number again.
Yes, my number is 516-532-8494, and call me at any time.
Okay. And this information is on the screen below as well. Well, Ryan, it was very nice having you and Caribbean News Blast.
Thank you very much for having me.
We look forward for you to come back with us time and time again, because I'm a financial dunce. I have no clue. So you're going to be my brain when it comes to the financial stuff.
I'm ready for it.
Okay, and please, again, send us any of your information that are suggestions or questions that you may have for myself or Ryan. And if I don't have the answer, of course, I wouldn't have the answer, but I'll get them to him and he'll prepare it for another show.
Oh, and one more thing. And if you decide that you're a texter instead of a caller, text me at any time you want. I'm also available like that.
Okay. You hear it there? You heard it here? You know, he wants you to text him if you want to. If you're somebody who, you know, the young people out them, they don't like it.
You're 100%. Face-to-face meeting, whatever needs to get done to make my clients more comfortable, I will do it.
And where are you guys located? Where's your office located?
Good question. We're located in White Plains, Westchester. I'm personally located, you know, where I live in Manhattan. So I'm available in the boroughs as well as Westchester, Long Island, wherever it needs to be done.
Mm-hmm. And so when you guys have a closing, do the people have to come to your office, or do you get you get everything set up where it could be done at the person's house?
That's a very good question. So we like to have the closings at our office.
Mm-hmm.
However, if it's a case where it's upstate or if it's in the island or the boroughs, and you know we can close, you know, we'll end up closing at one of the attorney's offices. We can end up closing at a house. It's, you know, we're able.
So you have like a closing attorney that
Yes.
will come out with all the documents and do it. Okay.
Very flexible.
So it seems like you guys really have a lot of stuff figured out in terms of how to make it easier on your customers.
No point in making it harder.
Yeah, exactly.
It's already a difficult
exactly.
situation.
Oh, that is so true. That is so true. So we thank you for coming on.
Thank you for having me.
And we look forward to having your future shows. And again, if you have questions for Ryan, you can call him at the number on the screen, and we'll be happy to address them on a future show. Thank you for joining us on Caribbean News Blast. Bye-bye.